This is the U.S. China trade deficit. The purple line is $200 billion. That's where we would need to get to. Mike? How many beans do you buy off of that?
Well, if you wanted to close it with soybeans, you're going to have to multiply it by 13 times the amount of soybeans. They buy about $10 billion a year worth of U.S. soybeans. Everything else less than $1 billion, so there's certainly potential scope to increase agriculture sales. The question is how much of that would be new sales as opposed to moving from other countries that you're exporting to China. And it isn't clear how much additional they can pick up. The other thing they're talking about, liquefied natural gas. As you know, there's a capacity constraint there. China is buying a lot of our liquefied natural gas. I brought along a chart here that shows both the opportunity and the difficulty that we have. This is a chart, I don't know if we can get it up, but it shows that you're looking at a very, here we go. The blue line, that's what China is buying overall. The little white lines down below, that's what we're selling them. So obviously there is a major opportunity to sell more, but as Alex would know, we have very few, we have only one at the moment operating liquefied natural gas terminal, maybe 2 online, 5 more coming. Bloomberg Intelligence estimates that we could triple the amount of natural gas sales to China over the next year. But of course, that only means about $1 billion worth of additional sales.
Oh, man.
So you got a long way with natural gas and agriculture to make up that difference.
$199 billion left to go, and then we're all set. So let's talk about the $200 billion, Sebastien. And how could we get there, or even close to there? And I want to ask you specifically, on the one hand, we had Larry Kudlow yesterday on the air saying, you know, this is just a matter of really eliminating tariffs and non-tariff barriers, and then it'll all come. That was his position. The other is maybe the so-called structured trade approach that President Reagan took back in the 80s, if you recall, with Japan, where basically if it's not quotas, it feels like that. Which one of those is more likely to get us closer to that $200 billion number?
I think ultimately this is more about the U.S. wanting access to the Chinese market. From a financial markets perspective, you have to remember there's a lot of noise around trade. This is perhaps mildly positive in the sense that we've removed the risk on the downside, but the size of the Chinese economy is 14 trillion US dollars. So whether we get 100 billion, 200 billion, from a big picture perspective, there is some noise in there. There's no final agreement that have been made, and it's not clear exactly where we go from here. So probably mildly positive because we reduce the risk and you see markets reacting to that. But ultimately, this is more about the U.S. getting access to China. There is no agreement on the amount, by the way, right? China said, we're going to buy significantly more from the U.S. That sounds good. It feels good. But this could reverse also through the negotiations. As we know, things change quickly around trade.